let's take a look here at Gatekeeper system. So this was an email that we received from a viewer, Dave. Just wanted our take on the company. So it's an interesting little microcap company here, profitable microcap. Symbol is GSI, trades on the TSX Venture Exchange. The stock price is 64 cents, about a $60 million market cap. So this is definitely a microcap. And what they do is they're a provider of intelligent video and data solutions designed for the transportation industry, specifically public transit and school buses. And they're essentially designed to monitor the buses as well as any type of incidents around the buses, for information that can be used to maintain safety of the drivers, as well. If there's any insurance claims, then they're able to use that information to essentially support their claims and save money. So this is a platform as a service business. It's done very well over the last year. The stock has big move up in the share price in 12 months, from about 20 cents up to about 66 cents. Now, if we look back a little bit further over the past 5 years, we can see quite a lot of volatility. So in early 2021, it had reached a price of about $1.30. So it's right now down by about half. But as I said, recently coming up. And then again, so what they do is they essentially they offer their services primarily to school buses and public transit. They outfit these buses with cameras that they can use to essentially monitor anything around it. So just as an example, you all know a school bus, when it stops, there'll be that little stop sign that pops out on the side. You're not supposed to go around the school bus because kids will be crossing the street in front of it. Well, what Gatekeeper system does is it can actually monitor if any vehicles violate that rule, drive past that stop sign, and it can capture that. It can capture the license plate and then send that information to the authorities, so that person would automatically get a ticket. So that's just one example of what their technology does. Another example is they can also outfit the inside of the school bus with cameras so that they can monitor what's going on in there. Privacy is a focus as well, so faces are blurred, but they can essentially just make sure that monitor for any type of vandalism, bullying, essentially keeping the kids safe. Outside of school buses, they also do public transit as well. So one of their big clients is the Southeastern Pennsylvania Transit Authority. They've done had several contracts with them. Right now, they're saying recurring revenues of about 2.4 million per year from this particular client. But what they do is they have cameras on the bus, and if there's any types of incidences around the bus that result in insurance claims, then they have a record of what happened, and that can be used. So, interesting company. Let's take a look at the recent financial results, which were released in January. These were the Q1 fiscal 2023 results. So big increase in revenue, doubling to 9.8 million, up from 4.88 million, and also a big increase in the gross profit margin. So 49% gross profit margin compared to 32% in the first quarter of last year. They had positive operating income, 2.1 million, positive earnings per share of 2 cents. And this is compared to a loss of 618,000 last year, or basically zero earnings. So big quarter. And this is probably driving a lot of the share price return, although the quarter was just released about a month ago. But, certainly it seems like strong financial momentum. Looking at the commentary, the company says this is the strongest first quarter in its history by a large margin. They generated growth in both the school and the public transit segments. They now have an installed base of about 50,000 mobile data collectors, and they're actively preparing and selling recurring revenue services to help customers, again, monitor and optimize this video data being recorded every day. Their new offerings utilize AI video analytics, software solutions, hosted software solutions, and wireless data connectivity. So certainly this seems like it plays into a lot of current themes right now with AI, which is very interesting. But when we look at a big quarter like this, we really want to dig in and figure out, what's going on here. Is this level of growth sustainable going forward? What's driving it? So when we see a small company like Gatekeeper double their revenues in a quarter, year over year, we need to figure out like what is actually happening there. Now, in the case of Gatekeeper Systems, the company did sign a big contract in September of 2023. It was a $9 million transit video and data contract. And they announced on January 4th that they completed this contract. And the way that this works is that the $9 million is essentially being um, recognized in primarily in two quarters, which is the first quarter of this year, the one that was just reported, and also the second quarter. So they are recognizing approximately 3.5 million Canadian in the first quarter of this year. So that goes into the revenue growth that they reported, with revenue up being up about 100%. They're going to then recognize another 5 million in the second quarter, and then they're going to recognize 400 or 500,000 in the third quarter. And then after that, all of the revenue from this contract will be completed. So if we look at the first quarter that they just reported, doubling earnings, so earnings of about 9.8 million compared to 4.9 million last year, we're looking at about $5 million worth of revenue growth there. Well, 3.5 million of that is from this contract. So major boost from this contract. Now, can we consider this recurring? Well, it's definitely not recurring. This is a contract that ends, and it has ended. Now, they can certainly sign new contracts that will generate more growth. But as of right now, in terms of what we know, the majority of this growth, about 2/3 of the growth, a little more than 2/3 of the growth that they generated in the first quarter, was just basically based on this contract, and it's not necessarily going to repeat. Now, it's great that they're signing these contracts. Another thing is that about 1.5 million or so of that growth was actually from outside of this contract. So there could be some organic growth there, something that's a little bit more sustainable, a little bit more recurring. But one way to look at this is certainly that when we get around to the first quarter of next year, this may be a quarter that is hard for them to beat, and they may see a decline in gross profit margin and revenue year over year, or at least less impressive results. So being that it's a contract focused business, this is something that we have to consider. But we do think that fundamentally, financially, the company has been very successful. They decided to expand into the public transit market in 2018. They've signed about $40 million of contracts since then. I had mentioned that one of their big clients is the Pennsylvania Transit Authority. It looks like they've signed several contracts and extensions with them. That's a great sign if your customers are coming back to you and wanting to do repeat business. Looking at the balance sheet, good solid balance sheet. I mean, there's a little bit of cash, about $2.4 million in cash. No debt. There is about 1.2 million in leases that we'll just basically consider debt. But that's about a net cash balance, a small, but still a net cash balance, about 1.2 million. Good solid debt to equity ratio as well. So no concerns about the balance sheet whatsoever. And then finally, looking at the historic financial performance, a little bit of volatility, certainly. But, generally pretty good, fairly consistent growth in revenue over the last 7 years or so. We saw a big uptick in 2020, both in terms of revenue and in terms of earnings, and then a decline in 2021. That may have been due to some issues with the pandemic. It may also have been due to a big one-time contract being executed on in that year. But good revenue growth since then. Decent growth in earnings per share, albeit fairly low earnings. So they did last year about 3 cents in earnings. You'd maybe put them at about say 5 cents trailing 12 months, including that contract. So, about 12 times, roughly about 12 times earnings right now. Not a bad valuation. But again, a company like this can be lumpy unless they can add on more recurring revenue over time. So what's our take on the business? Well, I think it's really interesting. I think that it's worth a deeper look. And that's really what this type of analysis is. It's not necessarily to draw a conclusion on the company. It's to determine, is this even worth a deep dive? And I would say that this is worth a deeper dive. It's worth a talk to management, see what types of contracts are in the pipeline going forward, and if they're able to replace some of that business that they completed in the first 2 quarters of this year. So good fundamentals overall. higher risk microcap company, but worth a deeper dive.
Yeah, I think Gatekeeper has done quite well. It's you point out the major risk, the contract nature of the business. If you look back just to the August 2022 quarter, 9.8 million. Then you go November 2022, it's 4.9. Then February 2023, 9.7. May 2023 is 5.9. And then you go August 2023 is 7.3. And then November, the last quarter 2023 is 9.8 million. So you can see it jumping around then. It looks to be jumping around in the right direction, and it has been operating income positive for the last 4 quarters. These are trending in the right direction, but it is the risk there when you're holding the stock. If you do have one quarter where they're just you drop down significantly over the past quarter, the market can take that as a negative sign, maybe overreact. I think if you're buying this company and owning it, you look at the balance sheet, and you also look at it on an annual basis, not a quarter to quarter basis. That's the way you have to look at it. Typically, a stock like that then gets a lower multiple. They don't usually get a premium multiple in the market, but it can change over time if they build up that order book and you see them continue to fill it and fill it and fill it. Then it can start to get a more premium multiple potentially.
One
And
thing
if
I'd
they
be
can obviously
interested
add that
just
recurring
from a
nature. Sorry.
public safety perspective is I'm
Yeah.
sure that what a lot of those systems are monitoring is also just the driver of the bus,
Yeah.
right? So if you have kids, I mean, my kids don't take the school bus, but if you did have kids that took the school bus, you'd want to make sure that there's a safe person behind the wheel. And I'm sure that these systems are also monitoring, how
And
that driver is
it
behaves on
does
the road.
check off some of those boxes that could give it some sex appeal, right? Like with the AI, with the monitoring, all of those things. And as recurring revenue becomes a larger part of the business, as I understand now, it's just a small part of the business, but as it becomes larger, then you could start to get a premium multiple at some point. So if you could have it get a premium multiple and continue to grow earnings over time, that's a powerful combination. That's where you can get a real long-term winner. But we'll continue to monitor it and probably talk to management in the near future.
Yeah, just on the safety, I think that's such a good point, because I remember vividly being terrified of one bus driver in high school or in elementary school. Sorry, we went on a field trip, and this bus driver ended up we were going to church because I was at a Catholic school, and he ended up running over this pole at the church, and he just drove off. He just kept driving. He didn't even, no one saw it. He just kept driving, and all these.
And this was
He's
high
like
school?
Otto.
Sorry,
from
this
The
was
Simpsons,
this was
right?
elementary school. This was elementary school, so I was probably well, I don't even know how old I was. It feels so long ago.
Oh God. It was like 3 weeks ago.
I don't even know how old I am right now. Anyways.
Cool.